from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Alphabet announces a 20-for-1 stock split, and shares soar. Google's fourth quarter sales also topping estimates, its ad business staying strong. We'll break down the numbers. Plus, Dorsey knocks Diem again. Why the Block CEO says Facebook should have focused on Bitcoin instead of creating its own cryptocurrency, or trying to. And a Bloomberg scoop, Ford is planning to spend up to $20 billion to prepare for the electric future and take on Tesla. We will have all the details. We'll get to that in a moment, but first let's get a look at the markets with our Ed Ludlow and the rally in tech stocks continuing. Ed?
Yeah, we got some momentum. You know, this is a three-day rally, best move on the NASDAQ 100, three-day move since November of 2020. We've got strong eco data that basically sets up this debate. How far is the Federal Reserve going to go of raising rates while the economy is strong? What is the priority here? But you can see for the time being, there's some confidence. We were lower on the NASDAQ 100 for most of the day. We close up 0.6% higher. Also strength in semiconductors and mega caps you see there on the NYSE FANG Plus Index. And that's at the same time, yields have kind of remained higher, up a basis point, 1.79% on the US 10-year yield. Let's get to a Bloomberg scoop, as you said. Ford, according to sources, is kind of really going for it, right, on their EV plan. This is reporting by myself and Keith Norton in Detroit. Sources telling us that they are restructuring, reorganizing, looking at the org chart and saying, what do we need for this EV future? They have 60 facilities around the world, and according to sources, they could look at those manufacturing plants and spend up to $20 billion over a 5 to 10 year time horizon to improve them. So one to watch. You can see there on the left-hand side of your screen, the stock did pop following that Bloomberg News scoop. And then, speaking of EVs, General Motors reporting after hours with its fourth quarter earnings. Remember, Emily, this was a fourth quarter impacted by a shortage of semiconductors. We knew that. So they missed on the top line. Net sales coming in a little softer than they expected, but they beat on the bottom line, right? Because we know that car prices are elevated, and they reaffirmed strong guidance-ish for 2022 in terms of net income and EBITDA that will make it a record year for profit. And then Google, Alphabet parent Google, this was the big one after market. You see we're up almost 8%, a beat on the top and bottom line. But I think really here the news is a stock split. 20-for-1 stock split, making that stock or different class stock more accessible to a broader range of investors. I know you're going to talk about this in a second. In terms of the specifics, Google will do a 20-for-1 for a stock split in the form of a special one-time stock dividend, issuing 0.1 cent for every Class A, B, and C share of the company's stock. So one to watch from now.
Ed Ludlow, thank you. I want to stick with Alphabet results and bring in Dan Newman of Futurum. Dan, let's start with the big picture. Obviously, sales here beating estimates, strong growth in the digital ad business, a little softness in YouTube. What's your big takeaway on the results?
Overall, the continued strength in tech is ringing through with Google's results here. The numbers in advertising, of course, carried the day. It was good to see the cloud growth continue into the 40%. I'm not sure, 45% actually. I'm not sure that the street will be as happy with that, with Azure still growing a little bit faster and that business still not being profitable. But I think that's an area they can continue to invest in as long as they keep generating these huge EPS returns and they keep, expanding their margins, and the advertising is strong. And some of those fears of TikTok and some of the other competitors don't seem to really be there, despite maybe just slightly smaller numbers from YouTube.
I just got off the phone with Alphabet CFO Ruth Porat, and we talked a little bit about the overall recovery, vaccinations, the second phase of the pandemic, all of that helped, but she said there's still uncertainty ahead. I do want to ask you about the stock split. Here's what she had to say to Ed's point, that for some investors, this makes their shares more accessible. Yes, they can do fractional trading, but still, and she didn't want to overstate it, some investors are saying this opens up additional avenues, and that's what they're responding to, giving more people access to buying Alphabet shares. What do you make of this?
The general sentiment when these kinds of splits take place is almost always bullish. Over the long haul, these splits end up yielding really significant returns. People that have held on to Apple for a long time have seen this before, and the accessibility is big. Investors, especially this younger, up-and-coming retail investment community, like to have bigger positions, and so the opportunity to buy this, to get in and have full shares, not fractional shares, and feel like they're a bigger investor, even if it is more total shares. I think there's a strong sentiment. And like I said, these splits almost always in the long run show great returns and show a very bullish sentiment from the company about its long-term prospects.
Does the slight miss in YouTube bother you at all? I mean, you know, when I think about the big picture, I mean, the money that YouTube is bringing in is almost equal to what Netflix is bringing in. So it's still a massive business. And Porat told me that really it's a difficult comp if you look back to the fourth quarter of 2020 when we were all on YouTube in the middle of quarantine. What's your take?
25% growth is still pretty robust. You're talking about a 2% miss. There's been a lot of speculation that TikTok and Instagram and other platforms that have become really popular with some younger demographics could be disruptive to YouTube, but I don't see that as a significant headwind. I think the overall growth and usage in this particular category expands more to opportunity for YouTube to keep getting bigger. So, you know, while TikTok and Instagram and Snap are all competitors, YouTube is a slightly different format, and I think it'll continue to grow. And the numbers here look really good. There's not a lot to be negative about from this result. And like I said, outside of Netflix, overall tech has been really strong given the overall sentiment coming into this particular earnings season.
Curious how concerned you are about regulatory scrutiny, especially when it comes to M&A. We have seen Microsoft do a number of huge deals. They don't seem to be in as much of the regulatory spotlight. Obviously, this huge recent deal for Activision. I asked Ruth Porat this a couple of months ago. She said it wasn't slowing them down. And again today, she talked about Fitbit. She talked about some of their smaller acquisitions that they're still looking to use their cash for strategic investments. But are you at all worried that perhaps Alphabet can't compete in M&A because of the regulatory scrutiny and that could slow them down?
Yeah, I think that Alphabet, Amazon, Meta, Facebook are all under extreme pressure from regulatory, but I don't necessarily think it's changing their decision making. I think that the Microsoft decision to buy Activision was extremely bullish, but it was also, we're going to see just how much Lina Khan is going to come down on this. For Alphabet, I think they're going to continue to look and make the moves and keep going forward. You know, they're already currently, you know, in that lawsuit with the 36 states and the DC right now about the mobile app store abuses. There's been some speculation about potential challenges around some of their digital advertising practices. But I think the companies, they keep moving forward. The laws and the updates and some of the bills in Congress trying to better moderate the way platforms grow, they haven't moved forward fast enough, and they're going to be really hard to manage. So it's hard to not like the prospects. I think regulatory is going to be there, and I think some investors are always going to be nervous about it. But in the long run, I think these companies are going to keep operating and keep trying to grow. And if you look at the results here, it seems that they're executing very well.
Another curiosity, Google's play in crypto and the blockchain. They just launched an internal digital asset group that's focused on Bitcoin and other next-gen technology. I asked Ruth Porat if this is a signal of Google's crypto play, and she talked about blockchain in particular, that they see it as a very intriguing and powerful technology, broader than one application or use. They're excited to explore how they can contribute to the ecosystem and add value. Of course, Google Cloud has offered some services to blockchain companies. Do you think this could be more than a minor dabbling play?
I think in the long run, we're going to see all of big tech expand their exposure to crypto and or the blockchain. There are so many different applications. We keep hearing the term the metaverse, but this is very, very early. It's nascent right now, but these companies are going to be investigating in any area that has a significant growth opportunity. We're hearing about mega investments that individuals and investors are making in digital real estate because of the metaverse. Of course, we're going to be watching Meta as it breaks out its Oculus numbers, which is another part of the metaverse. Crypto has been in focus as Bitcoin has now become part of funds and has become popularized. I expect companies like Alphabet to make significant investments in the blockchain for a varying number of its use cases, and this doesn't surprise me at all.
All right, Dan Newman of Futurum, thanks so much. We're going to be listening into the earnings call, give you highlights as we have them. Dan, thanks. Coming up, Jack Dorsey calling out Mark Zuckerberg and Meta's failed crypto project once again. What the Block CEO had to say and why he thinks Facebook should have been all in on Bitcoin. That is next. This is Bloomberg.
this whole thing with Libra and then Diem, I think there's a ton of lessons in. They tried to create a currency that was owned by Facebook, probably for the right reasons, probably for noble reasons, but there are also some reasons that would indicate trying to get more and more people into the Facebook ecosystem. And they did that instead of using an open protocol and standard like Bitcoin. And I think, hopefully they learned a lot, but I think there was a lot of wasted effort and time when those 2 years or 3 years or however long it's been could have been spent making Bitcoin more accessible for more people around the world, which would also benefit their messenger product and Instagram and WhatsApp and all these things.
Block CEO Jack Dorsey on what he views as the failure of Meta's crypto project, saying Facebook should have focused on Bitcoin instead. Dorsey speaking with MicroStrategy CEO Michael Saylor, the world's biggest corporate holder of Bitcoin, at a crypto event there. And for more, I'm joined by Bloomberg's Kurt Wagner, who covers Dorsey for us. Kurt, look, Dorsey said, Meta had the wrong approach from the very beginning, but he's really doubling down here. What do you make of that?
Well, first of all, he'd probably think that everybody should be spending more time on Bitcoin, not just Meta. So I think this is a criticism he could have lobbed to anybody. But, you really think of what Jack Dorsey believes is the future of crypto. He believes in this decentralized Bitcoin, right? This idea that crypto is not owned by anybody. It's not controlled by anybody. I mean, Emily, you and I were talking about this, I believe, just last week about why he's taking on venture capitalists who are investing in Web3 and other technologies like that. He sees that as ownership over something that shouldn't be owned by anybody. And so I think his biggest issue with, what was Libra has morphed into Diem was that it felt like it was a Facebook product that benefited Facebook and not the internet as a whole. And to him, that is not what cryptocurrency is all about. And as a result, he was pretty vocally critical of the project along the way.
Interestingly, we also got some tweets from David Marcus, who used to run Diem at Facebook/Meta, really throwing his support behind Bitcoin as well. It's become clear to me that Bitcoin will be the one asset in L1 still around in 20 plus years. It's truly leaderless, censorship resistant, has much greater network effects. What do you make of that, given that Marcus was, for a really long time, one of Zuck's biggest supporters?
Yeah, I noticed that tweet too, and it also caught my eye for a lot of the same reasons. I'm sure you noticed it, Emily. It's interesting to see him commenting kind of in what seems to align with what Jack Dorsey is saying, right, on the same day. We have seen David Marcus also tweet about kind of Web3 and the community around it and how inspiring he finds it. And so it does feel like since he has left Facebook, maybe he's kind of branching out a little bit, right? It was clear that when he launched Libra at Facebook, he wanted to achieve a lot of the things that that maybe he feels that he can now do when he's no longer at the company. And so I did find that interesting. It doesn't mean that you can't believe, in Bitcoin and something else. That's kind of Jack Dorsey's mindset. It's a one or nothing kind of thing. But most people, they believe in Bitcoin and Ethereum, right? And that's okay. So I imagine David Marcus might fall somewhere on that spectrum, but it has been interesting to see his commentary now that he's no longer inside of Facebook.
And why does Dorsey think Bitcoin is so much better than all of the other cryptocurrencies? Quickly.
Goes back to the control thing. I think he believes that Bitcoin is truly decentralized. It's not owned or controlled by anybody. And it is the only cryptocurrency that really can do that at scale. And for him, I think that's the most important thing about all of this.
All right, Bloomberg's Kurt Wagner. Thanks for weighing in there. Another story we continue to watch. Bloomberg has learned that the Federal Trade Commission will handle the antitrust review of Microsoft's proposed $69 billion acquisition of Activision Blizzard. The review will focus on the combination of Activision's gaming portfolio with Microsoft's consoles and hardware systems. The FTC has promised more aggressive policing of deals. Coming up, it is the end of an era. Football legend Tom Brady retiring from the NFL. What's next? The quarterback hinted that he could be all business. We'll dive deeper next. This is Bloomberg. It is the biggest story of the day, going viral around the globe. Tom Brady, the NFL Hall of Famer and 7-time Super Bowl winner, announced he's retiring just days after reports he was planning to hang it up after 22 seasons. The 44-year-old Brady writing in a lengthy Instagram post that he loved his NFL career, but now it's time to focus his time and energy on other things. I spoke with the CEO of FTX yesterday about Brady's possible retirement, a company that Brady has a stake in. This is what he had to say.
I don't know anything not public. I'll say what I said earlier, which is that our intramural football team has an opening at quarterback. He might be able to beat out our incumbent. That's always a possibility, but who knows?
For more on all this, I'm joined by Bloomberg Quick Takes Jason Kelly. Jason, obviously, Tom Brady, an incredible athlete, but he's always been more business-minded, quote unquote, than most other athletes. What do you think he's going to be doing next?
Well, you know, Emily, first of all, it's great to talk to you. I mean, he's going to be spending more time with his family and his NFTs, what anyone would do right now. But listen, this is a guy who, as you say, has had deep business interests from the beginning. He has studied Robert Kraft, the owner of the New England Patriots, where he won so many Super Bowls. He's had a business mind. You mentioned FTX. You know, I jokingly talked about NFTs, but this is a company, Autograph.io, that you're familiar with, that he's heavily invested in. He is working with them closely. He's got an apparel line. You know, listen, he's old by football terms. He's 44 years old, but he's got a long road ahead of him to do a lot of interesting things in business, that's for sure.
I will never forget watching Brady win that first Super Bowl in college in Boston and the crowds in the middle of those winter streets in Boston. You know, talk to us about how, you know, athletes in the businesses that they're involved in is changing. I mean, you've talked to LeBron, you've talked to A-Rod, and they've all expanded these sort of massive business empires on the back end of their careers.
Yeah, and I think what's so interesting, Emily, is that they're starting much earlier. You know, this isn't a moment where Tom Brady is retiring and saying, okay, what am I going to do? As we've talked about, he's got some existing businesses now. And so I think that's what's different from 10, 20, certainly 30 years ago when you would play, you'd focus on playing. Even Michael Jordan, to some extent, really only focused on playing. Everything he did in business afterwards, you know, really came when he hung up his sneakers, his very valuable sneaker deal, of course. But I think the other interesting thing is that these guys and women, you know, you look at a Serena Williams, you look at a Megan Rapinoe, you know, these are folks who are taking a role as investors, not just endorsers, as owners. And I think that is a pivotal difference. And that's why you see the wealth creation that you see with a LeBron or an A-Rod. And I think that that's just a fundamentally different thing than we've seen in the past.
What about on the lifestyle side? I mean, there's so much has been made of the avocado smoothies, and you know, he's made that known.
Yeah, and I think it's a great point, because I think what Brady has really tapped into, LeBron very similarly as well, is that it's not just about me being an athlete. It's about me being a man. It's about me being a person. It's about fashion. It's about media. It's about content. It's about technology. When you think about the NFTs, there are a lot of ties back to athletic performance when you think about something like TB12, but it's not just about how do you get stronger by lifting weights. It's what are you eating? When are you sleeping? How are you tracking everything? And you look at apparel, and you know these are the sorts of things that are the makings of an empire for sure.
So, you know, if you could predict where's he going next? I mean, and how much will crypto play a role in that future?
I think the technology side, the crypto side will be huge. You know, you spoke with the guy at FTX. Maybe he will be on that flag football team. That would be great, I think, for them. But, you know, on a more serious note, look at somebody like Steve Young, you know, former Hall of Famer, you know, right there in your backyard. He's a very high-level senior working partner at a private equity firm. Could you see Tom Brady go and join and be an active venture capital investor? Absolutely. I mean, those are the sorts of jobs that these guys are willing to take on, not just as someone who shows up and shakes hands and takes some pictures, but someone who actually gets into deals. And he's already doing that to some extent. So could we see a Brady-led or a Brady-participating venture capital firm? I wouldn't bet against it.
Well, if you love him, whether you love him or you wanted to beat him, he certainly has made an impact, and we'll be watching to see how big that next chapter will be. Quick takes, Jason Kelly. Jason, great to have you back. And a reminder, Bloomberg will be hosting the Power Player Summit next Friday in LA ahead of Super Bowl 56. Aaron Andrews, Arthur Blank, Carly Lloyd, Jimmy Pitaro, Rich Paul, all among the speakers. Sadly, the 49ers will not be there, but maybe you'll still be watching anyway. And speaking of sports, the NFL's Denver Broncos are going up for sale. That is according to a statement by the team's president, Joe Ellis, saying selling an NFL team is a complex process, but they have hope to conclude the sale by the start of 2022, the 2022 NFL season, adding, whoever emerges as the new owner will certainly understand what the team means to our great fans and this community. Meantime, Jack Sweeney, the freshman at the University of Central Florida, is now in a standoff with Elon Musk after creating a Twitter service tracking his private jet. It's called Elon Musk's Jet, and was launched in June 2020. Musk offered the teen $5,000 to shut down the service, but Sweeney turned it down, raising the stakes to $50K or an internship opportunity. Now he says he's been blocked by the billionaire on social media. In the meantime, he's launching a business called Ground Control to monitor the flight activity of other billionaires like Bill Gates and Jeff Bezos. Coming up, we're getting closer to a vaccine for all. Pfizer requesting the FDA to approve its COVID vaccine for kids under 5. When that could happen, what it means, next. Plus, Ford's big plans to take on Tesla, sources saying the car maker is accelerating its EV spending by as much as $20 billion. More on that scoop later in this hour. This is Bloomberg.
With Peloton struggling and Apple riding record profits, there's been a lot of speculation that the iPhone maker could acquire Peloton. But in my opinion, not so fast. When Apple buys companies, it typically does so to develop individual new features. Take Authentic in 2012 and how that enabled Touch ID, or Siri before that. Peloton wouldn't necessarily fit the bill, but it would give Apple the ability to jump into the physical exercise equipment market. But that's unlikely because bikes are low margin, expensive to make, and very expensive to ship. Upgrade cycles are also very infrequent. So I think we can rule out Apple buying Peloton for hardware. But what about software? Peloton has developed fitness applications for its own hardware and third-party devices, but I don't think Apple needs any more fitness software expertise. Next, content. Peloton has a strong array of fitness classes. It currently blows Apple's Fitness Plus out of the water, but I think it would be a lot cheaper for Apple to just invest further in Fitness Plus rather than gobble up all of Peloton. With all that being said, Peloton could still make sense in terms of its underlying tech, some patents, and key employees, but I still think the company is too pricey, even despite its recent fall. Apple certainly needs to upgrade its fitness portfolio, but I don't think buying Peloton is the answer, at least for now. I'm Mark Gurman, this is Power On.
Don't forget, you can subscribe to Mark's weekly Power On newsletter, Bloomberg.com. All right, moving on now to the pandemic. Major news for parents of small children. Pfizer has asked the FDA to authorize their COVID vaccine for kids aged 6 months to 4 years old. For more on this, I'm joined by Bloomberg's Jonathan Levin. Jonathan, thanks so much for joining us. Huge news here. Tell us where we are.
Hi, Emily. Yeah, so exactly as you said, I mean, this is big time for parents of those children ages 6 months to 4 years old. And of course, this just is monumentally important for society as a whole. The Omicron variant sent hospitalizations of these young kids in particular way up in December and January. And although the outcomes, fortunately, have continued to be much, much better than adults, especially those older adults, parents just don't want to see that. So it's going to have a big impact potentially on the psyche of the American public. These vaccines have proved to be very, very effective at preventing severe outcomes. And the hope is that it'll do the same for those kids.
Tell us more about the Omicron subvariant and how worried we have to be about that.
Sure. Experts are saying that we're really in just a wait and see with this. Obviously, we've begun paying a lot of attention to it because of the very dramatic surge that we saw in Denmark. A new study out of the University of Copenhagen suggests that the new subvariant is spreading even a little bit faster than the original Omicron, but critically, it doesn't appear to be any more virulent, right? And of course, the original Omicron, on average, is appearing to be somewhat more mild than previous versions of the previous iterations of COVID-19.
Let's talk a little bit about the latest numbers and hospitalizations and what that tells us about this phase of the virus and what's next.
Sure. We appear to be seeing some pretty promising momentum. As our story today laid out, you're seeing pretty significant drops in the 7-day average of new hospitalizations in 34 states, and really even in some of the laggard states. They should be catching up relatively soon. New York, of course, was one of the earliest Omicron states, and you see cases sort of dive bombing about 92% from peak. So clearly some positive momentum, and a lot of experts expect that to carry through in the weeks and hopefully months to come.
So let's talk to us about what's happening in various states. Still, you're seeing in certain states, Oregon, Wyoming, Alaska, different surge patterns that than we're seeing elsewhere. What do we make of that?
Sure. So what we've seen with Omicron is sort of a hyperspeed version of what we've seen with previous surges. Oftentimes, these variants tend to enter through the major metropolitan areas that have a lot of international travel. We saw Omicron work its way first through New York City, places like Miami. After that, with something like a 2-week lag, we tend to see it move to the more rural parts of the country, right? So right now, we're still seeing hospitalizations go up in Oregon, Wyoming, Alaska, Kentucky. Fortunately, the leading indicators there suggest that they are on a similar trajectory to the rest of the country, and you would expect those numbers to start coming down soon.
All right. Bloomberg's Jonathan Levin, thank you for that update. Coming up, the Litecoin Foundation's mission to develop sound money. Managing Director and Litecoin founder Charlie Lee will tell us all about their new upgrade and what that means for users next. This is Bloomberg.
If Bitcoin existed before Twitter started, I think we would see completely different business models. I think we'd see a lot less of the issues that advertising systems can bring up in terms of privacy and everything we're seeing around surveillance capitalism as well.
Jack Dorsey there speaking at MicroStrategy World, a 2-day conference organized by Michael Saylor's MicroStrategy, focused on the digital transformation and, of course, Bitcoin strategy. MicroStrategy, the biggest corporate holder of Bitcoin in the world, of course. Sonali Basak with us now. Sonali, break it down. Lots to digest here. What caught your eye in this conversation?
A few things, Emily. One is Jack Dorsey talking about the technology itself and how it would have transformed, as you heard, Twitter had it been some technology they could have used earlier on. I want to point out, though, interestingly, that Twitter had been open to using Bitcoin as a technology while Jack Dorsey was still in charge. The idea that they could use the Bitcoin through the tipping platform Strike and the Lightning Network, which tends to prefer Bitcoin as a platform itself. I hope on this program you and I will consistently discuss the benefits of Bitcoin versus other platforms. The other thing that Jack Dorsey had spoken to was the transparency of Bitcoin as a financial asset. The idea that it's decentralized and more transparent in fees and other means than a traditional banking ecosystem. So you have the technology on one hand, the finance on the other hand, and then of course, the reason of this conference itself, MicroStrategy and its use for companies, the idea that more companies should be thinking about the way to use Bitcoin, even if they're not putting it on its own balance sheet, Emily.
Dorsey doubling down in so many ways and throwing shade at Facebook and Mark Zuckerberg. I want to stick with crypto now. Bring in Charlie Lee, the Litecoin founder and managing director of the Litecoin Foundation. Litecoin, of course, has been called the digital silver to Bitcoin's digital gold. And the foundation just announced a new privacy-oriented protocol called the Mimblewimble, a little twist on Harry Potter there. For anyone who's a fan, Charlie, good to have you back with us. Talk to us about the use cases of Mimblewimble. What does this do?
Sure, thanks for having me, Emily. So in 2011, when I first found out about Bitcoin, I saw it as like a perfect form of money, actually better than gold, better than US dollar. But the only thing missing from it being like real sound money is fungibility. And what that is basically every single bill is the same as every other bill. So every dollar is the same as every other dollar. Every Bitcoin is the same as every other Bitcoin. So for example, if you go into the store and you make a purchase, it doesn't matter which $20 bill you pull out of your wallet, it's exactly the same. It will be treated exactly the same. And right now, that's not the case with Bitcoin and Litecoin because of the transparency of the blockchain. So when you make a Bitcoin and Litecoin transaction, everyone will see how many Litecoins or Bitcoins that you sent over the network. And because of that, it makes each transaction not fungible. When you, for example, when you got paid in Litecoin, for example, and then you use that payment to pay for your coffee, the recipient will actually see how much money you have in your wallet. And that's not good for money, right? When you want to spend money, you want to be able to spend money without worrying about losing financial privacy. So this is what we're trying to fix with Litecoin. We're trying to make Litecoin more fungible. And what that means is making transactions not transparent, where the amount that is being sent is actually hidden from everyone else except for you and the recipient. Right. And this technology is Mimblewimble, but we're calling it MWeb, which stands for Mimblewimble Extension Block. So we're adding it as an extension to Litecoin.
Now, privacy upgrades like this do come with other challenges. What do you have to say to regulators who are worried about money laundering?
Yeah, so for one thing, I think financial privacy is a human right. So we should all be able to spend money without exposing how much money we have. That said, it's important that for one, that regulators can oversee what's going on the Lightning Network. So we're doing this as a optional opt-in to using MWeb. So exchanges, for example, would not have to work with the MWeb side of things. They can just work with the transparent Litecoin blockchain itself. But people using Litecoin can move coins between the mainnet and to the MWeb extension.
Well, there's a huge juxtaposition here as well. I mean, how do you have a cryptocurrency that is both more transparent and open while also having so many anonymity features? Doesn't that create a bit of a culture clash in the ecosystem?
To be fair, MWeb is not perfect anonymity, right? So the most important thing is it's hiding the amount being sent. So when you're depositing, for example, your Litecoins into the exchange obviously knows and can see, because if they require you to deposit on the mainnet, they can see how much Litecoins obviously you're depositing. But kind of hiding the amount, I think, is important for financial privacy. It doesn't make it easier for criminals or nefarious people to launder money through Litecoin.
Charlie, I'm wondering also, what does your personal holdings of cryptocurrency look like now? We know you sold your Litecoin holdings a while ago. Litecoin is actually up on the news today. So have you bought the dip in other places in any fashion, or are there other technologies that you've come to believe in more?
My main holding is Bitcoin, right? So I believe in Bitcoin. I believe in cryptocurrency in general. And I've stated my reason for being divested from Litecoin, so I can focus on working on Litecoin, which I've been doing for the past 11 years, and not worry about the ups and downs of the price movement.
Dogecoin was based off the Litecoin protocol, and I got to ask what you think of Elon Musk taunting McDonald's and the sort of general taunting around Dogecoin that's been happening over the last several months.
I think it's pretty fun. I like Dogecoin. I think Dogecoin brings a lot of new people into this space. cryptocurrency is pretty scary for most people, but when you put like a dog meme icon on a logo, it makes it more fun and more easier for people to get into. And once they actually start buying and using Dogecoin, they realize the power of cryptocurrency and will start getting to Bitcoin and even Litecoin. So I think Dogecoin is great, and I think I like what Elon is doing, just getting kind of cryptocurrency into mainstream topic.
You know, back to the technology also, Charlie, you have mentioned before, you've mentioned online that it's taken a long time to get here to this upgrade. What are the challenges you faced in getting to this point?
Well, the main thing is Litecoin is a multi-billion-dollar currency, right? So we want to take things slow. We want to make sure the upgrade goes smoothly. We don't want to take unnecessary risks or cause the network to go down or anything that can cause problems with people's money, right? And at the end of the day, Litecoin is being used daily as money. People are spending Litecoin to buy stuff. So we don't want any upgrades to cause problems. So that's why we're taking it slowly. And also the MWeb technology is complicated, right? We're trying to use cryptography to hide the amount for the transaction, also do it in a way that's scalable. And it's a hard problem to solve, and we're just taking it slow and doing it the right way.
Charlie, we heard Jack Dorsey again double down on Bitcoin and Bitcoin only. Obviously, Michael Saylor has done the same. What do you make of that narrative, and why are they wrong?
I wouldn't say they're wrong. I think just like how Coinbase started with Bitcoin only, it's the right thing to do because Bitcoin is the king of cryptocurrency. I consider the reserve crypto. So it's right to kind of just focus on Bitcoin initially. And once you've solved that problem, you can start expanding into other cryptocurrencies like Litecoin.
All right. Charlie Lee, Litecoin founder and managing director of the Litecoin Foundation. Always happy to continue these conversations, as well as Bloomberg's Sonali Basak. Okay, coming up, what Ford is learning from Tesla. Sources tell Bloomberg that Ford is planning to spend as much as $20 billion to prepare for the electric future. More on that coming up next. This is Bloomberg.
I really admire, frankly, the difficulties they had and the way they managed those difficulties into the success they had. They're now making more than $10,000 a vehicle because of their scale. I like that kind of business.
That was Ford CEO Jim Farley talking to me about how Tesla inspires him. Well, now it seems Ford is taking its inspiration one step further. According to sources, the car maker is planning a major reorg to prepare for the electric future and accelerating its EV spending by as much as $20 billion. I want to bring in Bloomberg's Ed Ledlow, who helped break this story earlier today. Certainly interesting, Ed, to see your scoop in the context of those remarks that Jim Farley made just last week.
Yeah, I think it's not so much the headline figure of spending $20 billion to transition the plant. It's the bigger picture, and sources telling us that this is a reorganization, a restructure to get the company ready for a future where it's just building EVs. You know, Ford has such a massive manufacturing footprint around the globe, dozens of factories, almost 60, and it needs to earmark some money to transition those assembly lines to EVs on top of the $30 billion that it's already committed.
Now, one of the interesting things Farley talked about is just how different it is building an electric car versus a gas-powered car, how you kind of need to create a whole new organization. He compared it to snowboarding versus skiing. Take a quick listen to what he had to say.
It's kind of like snowboarding and skiing. We both share the lift, but as soon as you get off the lift, the intuitions are wrong between both businesses. You know, you kind of have to relearn how to get down the slope.
How does that thought, Ed, play into the way this reorg is happening?
Yeah, I should point out that Farley, even though he spoke to you a week ago and it was so insightful, he didn't contribute for the story we broke today. But he clearly has admiration, not just for the way that Tesla does things right now, but the struggles that it went through, right, to reformat its business. And he's right, you know, the operational structure and hierarchy for an EV company and a traditional combustion engine gas company is different. And sources are telling us that the restructuring, reorganization is literally that, a reorganization of the org chart. They need to hire in really specific areas like battery chemistry, software, AI engineering, and basically, you know, make sure that the company is set up in such a way that reflects how it will run when EVs are more commonplace and some of the functionality that EVs bring with it.
Ford has poached some executives from Apple, some executives from Tesla. Are we expecting more of that to happen? And what is the appeal of Detroit versus these big Silicon Valley players?
There's so much in this story, and for those listening out there in Silicon Valley, if you work at an EV startup or you work at a legacy automaker, contact me. Let's talk about it, because the legacy guys, Ford and GM, they don't have the same pay structures that startups like Rivian or Tesla do, where they offer equity compensation, right? You know, it's such a competitive market for talent right now. Remember that, you know, in part of the story we broke on Tuesday, sources are telling us that Doug Field is leading this whole restructuring. He was at Apple, of course, as their car chief, but was at Tesla for a long time as VP of engineering. He had a really kind of central role in the world of Model 3. And I bring all that up because there's a finite number of people out there that have the experience of doing this, launching a new EV product and scaling its manufacturing globally. And there's demand for those folks. You look at the merry-go-round of Tesla alumni that are now at Rivian, for example, but there are also lots of Ford people at Rivian and GM people at Rivian and Apple people at Rivian. You know, so it's a really dynamic space, and it's interesting to see what Ford will do to win them over.
And how do you expect competition, let's say, over the next year to shake out? You've got Ford with the Silverado, you've got the Rivian truck finally available, and you've got Ford stepping it up, but Tesla with a gigantic lead.
The reality is that EV sales in the United States are only 3 to 4% of overall sales, right? And in Europe and in China, that number is much greater. Much greater, but more and more is coming online. And in fact, the most interesting part of that Farley interview that you did that I found was him resisting the urge to give a big picture forecast, right? He said 600,000 EVs per year, I think by 2023, 2024, or over the next 3 years. But clearly, they've had to ramp up what they're doing with F-150 Lightning. They've had to ramp up what they're doing with Mustang Mach-E. And the scoop we broke today kind of shed some light on their forward thinking. What are they going to have to do to really scale that big way? And by the way, during GM's earnings call, Mary Barra is talking about doing 400,000 EVs in 2022. Let's see, or 2022, 2023. Let's see how that goes.
All right, Ed Ludlow, great scoop. Thanks so much for breaking it down. Meantime, Tesla is disabling a feature of its self-driving system that came under scrutiny from U.S. regulators. This allowed cars to slowly roll through intersections without coming to a complete halt when no other cars or pedestrians were present. No accidents have been reported, but Tesla will recall more than 53,000 vehicles. And that does it for this edition of Bloomberg Technology. Tune in tomorrow. We've got a blockbuster lineup. AMD CEO Lisa Su will be joining us off the back of the chipmakers' results. Michael Saylor of MicroStrategy, they're reporting results as well. We'll talk about the broader crypto landscape, of course. And Salesforce co-CEO Brett Taylor joining us exclusively. You don't want to miss that. I'm Emily Chang in San Francisco. This is Bloomberg.